Happy Monday, everybody. I hope you had a great weekend. Today is June 30th, 2025, the last day of the first half of 2025. Now, how did that even happen? Today is your Monday market update. Let's break down last week's day by day market story. Then let's look at what's ahead as we close out June and head into the holiday shortened week. Markets opened the week last week, climbing back from the prior week's brief pullback. Over the weekend, the U.S. had carried out the airstrikes on 3 Iranian nuclear facilities, but Iran's retaliation, a strike on the U.S., the airbase in Qatar, that turned out to be limited and caused no casualties. This not as bad as feared outcome did help to turn risk-off positioning into a classic buy the news rally. On top of that, stronger than expected PMI flash reports and a solid existing home sales figures helped to ease recession worries. Stocks staged a sharp V-shaped move midday as the Iranian missile headlines crossed the tape. Markets dipped, but quickly reversed when it was clear the attack caused little damage. By the close, the Dow was up almost 1%, S&P up almost 1%, and the Nasdaq closed higher by about 1.25%. Tuesday brought a geopolitical exhale as President Trump announced a ceasefire between Israel and Iran, helping markets shed some Middle East risk premium. Stocks gapped higher on the open in a broad global risk-on flow. Fed Chair Jerome Powell's first day of semi-annual testimony kept the mood dovish. Powell reinforced the Fed's wait-and-see stance, hinting the door is open for cuts if soft data keeps coming. And soft it was. June's consumer confidence index fell more than expected to 93 versus forecast for a slight uptick, while 2 key home price indices turned negative month over month, a fresh sign that the housing market's cooling. Bond yields dipped and equities pushed higher all day, brushing aside late-day reports that U.S. strikes on Iran may have caused less damage than initially reported. News or not news, we'll see. The Dow closed up 1.25%, S&P climbed about 1%, and the Nasdaq advanced roughly 1.5%. Midweek trading on Wednesday was more cautious. Stocks opened strong again, lifted by strength in techs and semiconductor names. Excuse me. Nvidia made fresh record highs, stoking the AI optimism narrative, but the optimism faded as the day wore on. FedEx delivered weaker than expected earnings, blaming the hit partly on tariffs, which weighed on sentiment for economically sensitive sectors like transportations and small caps. Meanwhile, May new home sales came in sharply lower, dropping over 100,000 units to 623,000, a steeper decline than economists had forecast. Powell's second round of testimony before the Senate Banking Committee was cautious, again emphasizing patience on cuts. But by late morning, stocks gave back their early gains and drifted sideways for the rest of the day. When the dust settled, the Dow slipped 0.25%, the S&P ended unchanged, and the Nasdaq was up by about 0.25%. The bulls stepped back in on Thursday. New cracks appeared in the labor market. Continuing jobless claims hit a multi-year high, pointing to slowing momentum in hiring, a key data point that sparked fresh bets that the Fed will cut rates sooner rather than later. That overshadowed a headline-grabbing spike in durable goods orders, which surged 16.5% in May. That's the biggest jump in over a decade. Though that figure was heavily skewed by a massive one-time surge in aircraft orders by Boeing, under the hood, core capital goods orders, a cleaner read on business investments, still posted a healthy 1.7% gain. With the labor market cracks outweighing durable goods noise, the market rallied into the close. Geopolitical tensions continued to ease, with reports that President Trump was considering rolling back some sanctions on Iran. The Dow rose about 1%, S&P gained 0.75%, and the Nasdaq rose roughly 1%. Friday's action was relatively calm but constructive. The final piece of big data, the core PCE, the price index, the Fed's preferred inflation gauge, came in line with mild expectations, reinforcing hopes that inflation will stay tame enough for cuts by the Fed. Traders also found optimism in chatter about tariffs. Fresh signs of possible trade deals with China and the UK did help sentiment. Markets ticked higher in light volume ahead of the long holiday stretch. Markets were back and forth on trade news as President Trump posted that he was walking away from talks with Canada, and that took some wind from the sails. But then Commerce Secretary Howard Lutnick reported to Bloomberg that a framework was set with China and that he expected to reach deals with 10 major trading partners soon. Now, more on Canada in just a moment. At the close on Friday, the Dow tacked on about 1% higher. The S&P added 0.5%, and the Nasdaq closed up about 0.5%. For the week overall, the Dow rose about 3.33%. S&P added 2.75%. The Nasdaq was up roughly 3.2%. The week ahead is going to be shortened by the early close on Thursday and a Friday holiday, with markets closed as we celebrate Independence Day. But the economic calendar is anything but quiet. We are squeezing the full first week of the month into just 4 days. Now, remember, the first week, that's jobs week. So today we're going to get Chicago PMI. Tomorrow we'll see ISM manufacturing, JOLTS jobs, the jobs opening report. Wednesday, we'll see the ADP private payrolls. Thursday, we're going to get both Thursday and Friday releases all at once. The big one, of course, the June non-farm payrolls, with consensus expecting around 110 to 120,000 new jobs and a steady unemployment rate of 4.3%. Now, not to be missed, Fed head bingo. They're back this week. Fed chatter won't stop. Chair Jerome Powell, Chicago Fed President Austin Goolsbee, Atlanta Fed President Raphael Bostic, New York Fed President John Williams, Vice Chair Michael Barr, and Richmond Fed President Tom Barkin are all scheduled to speak. Every remark, of course, is going to be parsed for signs of when the Fed might actually pull the trigger on a rate cut. People are starting to talk about July. I'm not so sure. Remember, I think that these guys talk to just sort of get the opinion of what the markets are going to think about them. Remember, the Fed will be reacting to slowing growth. And if you notice, the markets are priced for the best of times. We'll see what happens there. So the bottom line, markets are heading into the holiday week with momentum, easing global tensions, softer data pointing towards a cooling but still resilient economy, and the increasing likelihood that the Fed has room to cut by fall. The labor market and inflation trends this week could shape how quickly that door opens. Add to that promises of the big, beautiful bill being signed by Friday, not so sure. So tax cuts, tariff resolutions, and even ceasefires all around. And back to Canada for a moment, they withdrew the tariff that made the U.S. close out negotiations, so that may be back in play today also. This market is priced for Independence Day. Stay tuned. I think you'll continue to see volatility, but risk is to the upside. Momentum is with the bulls. As you go into this last day of the first half with things where they are, please see me for that risk audit that I'm offering. Where are you and where do you want to be? Those are the forever questions. For now, have a great week. Enjoy the 4th, and let's talk if you want to revisit your game plan before the fireworks.